Hey there, friends. Thanks, Miss Lo-Fi, as always. How's everybody doing today? It's a fine summer day to be doing Foxenomics, unless you happen to live in the southern hemisphere, like Australia, in which case it's a fine winter day. Um, so yeah, kind of a lull this week, relatively speaking, in the markets. Well, I should probably check prices before I say that. I haven't looked at since this morning. Yeah, I mean, relative to what's been going on, we've kind of calmed down from that awful sell-off. I was just chatting with some friends about whether or not the worst is over. I I personally don't think the worst is over yet, but we're definitely closer to the bottom than the top. I think the next data from a macro perspective that's going to really be driving both equities and crypto is going to be the release of the next CPI data for June. That'll be coming out on July 13th, and you can expect a really strong market reaction to that if it's either an upside surprise or downside surprise. It's rare for crypto to be this tied in with what's happening in the macro world. We haven't really seen that in recent years quite so much, but here we are. So again, the long-term fundamentals I think are really strong for crypto, but just a matter of dealing with all this craziness. We got the 4th of July coming up here in the States next week, so I imagine some people might be on vacation. I hope everybody has a chance to chill, but we'll be cranking right along here in tokenomics because, hey, the market never sleeps, right? So turning our attention to the agenda, I couldn't decide what to lead off with for the first item because they're both important. One speaks more to like what's happening right now, more is about the future. But I guess we'll start off with the immediate, and it's always the top priority. Really, is just in terms of what does our treasury look like, what does our runway look like. So I posted that these updated runway projections that I maintain into the chat. The TLDR on this is, well, I guess I should preface this by saying these current projections, of course, they include our latest stablecoin treasury. This actually does include some recent sales we've made via our Olympus bond, our USDC to Fox bond. Those emissions have been greatly reduced. I mean, just to give you a sense of how much lower they are, we used to generate about $100,000 a day from these bonds, and now it's more like $100,000 a month. So between, of course, also the price of Fox dropping a lot, but these emissions dropping, it's really been greatly reduced. But that does make a difference, getting that revenue every month. And the latest gains we've had into the DAO's stablecoin treasury are incorporated here in the projections. The projections do not forecast any additional revenue or income from stablecoins or into stablecoins, because that would be assuming too much in this market. Is it likely we'll continue to generate stablecoins? Yes, it is, but certainly we don't want to. Nothing we want to factor in. We need to always plan for the worst case scenario and make zero assumptions. Also, of course, this does not include any revenue to offset these expenses. But really what this is here in the spreadsheet is incorporating the latest projections that I've seen from workstream leaders in terms of what budgets are likely to look at moving forward. This, of course, is a big difference versus what we were spending before, which was north of like $550K a month. So we're seeing a reduction in the overall DAO's spend in reaction to this bear market, which really does make a difference. As of May, we had a runway of like 9 months. Now we're currently at 10 months. We're moving in the right direction here, and that's in response to the cuts that were made primarily here. I'm also factoring in an assumption that people will that 5% of contributors' overall salary will be paid out in boosted Fox, which of course negates the need to pull from our stable stack. I feel like that's a reasonable assumption. I think I will be updating that based on seeing how many people take boosted Fox in July. Okay, so what did I just say? Well, the big deal is, we have a smaller budget now. And what does that mean? Well, I mean, that means salaries have been reduced or positions have been eliminated. So, there's no way to like sugarcoat this and put a happy face on it. It's a necessary thing that, the DAO, in my view, needs to do in order to, survive this bearish market. We're in very good company. Coinbase reduced their workforce by 18%. Of course, they have a much bigger, many more people working on that project. But, and many other big names in crypto are doing the same thing. It's just kind of a normal thing that happens in these cycles. But, it also is a painful thing for those that, are no longer earning that contributor income from the DAO. So for anybody that's been affected so far, just want to take a moment to just, give everybody a lot of respect and props for lending their time and talents and energy to the DAO. Of course, this is an open community, and I would imagine that some of these people may rotate back in the future. The DAO isn't going anywhere. We're going to survive this. I did want to address one sort of misconception I saw popping up in a few different places about what effectuated these reductions. There was kind of a perception that popped up that this was kind of like the result of a coordinated action. So kind of, in fact, what happened was this. I presented kind of this updated budget to the various workstream leaders, and in response to that, they each came to their own independent decision whether or not to make cuts. Of course, we have seen some cuts already. This was completely the decision of those various workstream leaders, sort of acting under the scope of their own workstream budget. There is no sort of like collusion amongst various leaders to effectuate these cuts. It's it's really up to the workstream leader to decide what they do, and of course it's up to the community moving forward to also provide that measure of budgetary oversight, I would say, or ultimately everybody's beholden to governance, to Fox holders. So, something to keep in mind moving forward. There's nobody out there that's, that can crack that whip or wants to crack the whip and say, okay, guys, we're, cutting things. This is all up to workstream leaders and ultimately governance. But, just wanted to clarify that because, it isn't a great thing. The upside is, I think the DAO will be in a position to move forward as a leaner and meaner beast. We have so many unique value propositions from Fox Chain to this decentralized platform that can plug into everything basically. And I think it's also a good time to really step back. And here I'm just providing my own opinion as just one workstream leader, but I think it's a good time to step back and say, okay, well, we as of right now, we don't have a smash product market fit. We've met with some success, but I don't think we are where we want to be. Even during the bull market, we hadn't really had that perfect fit yet. So it's a time to experiment more, to explore, to really consider everything, like second guess everything, and kind of really take a look at where we're going as an organization. I was talking to a friend over the weekend who has a non-crypto tech startup. It's been around for about 4 years, and they were sort of going through this period of wandering through the forest, kind of like their own search for a product market fit, and they tried various things, and then they happened upon something that just really took off, and it wasn't part of their initial mission, although it did fit kind of like what they were trying to do. But anyway, long story short, they had some major partnerships with Fortune 500 companies, and now they're in really good position. So I don't know. I guess my point here is that we have the right crypto values that I think will, and basically the commitment to decentralization that ultimately makes a difference, I think, and so many talented people working with the DAO. So Never Was, thank you for that post in the forum. Never Was had some interesting comments about just fiscal responsibility in general, and sort of just articulating a broader strategy for sort of move, how the DAO might move forward. That's like exactly the type of discussions we should be having. I think, it's sort of like with respect to, there's kind of like a few different things here. I'm sort of like, I was going to make a meme out of there's that meme where the guy is like in front of two buttons and they're like, mutually exclusive. So the one I was thinking about is like, either like cut budget or run out of runway, or also reduce emissions, run out of runway. So basically we're in a position where, the simple fact is currently we have 10 months of runway, and, we really can't, we will do our best to increase our stable stack, but there's certainly no guarantee of that. And as well as generate revenue that could offset things. But as it stands right now, if this bearish period lasts as long as it did last time, we're not going to make it. So this necessitates changing something in our current approach. One is certainly budget reductions, and it seems like everybody is being more conscientious of budget in this environment, as we've seen from individual workstream leaders. Additionally, there has been, pushback against like Fox emissions via the bond, and kind of this idea of we're just basically giving away these discounts. That's certainly a fair point. I'm of the belief that Fox itself would be sharply down regardless of what we're doing there. And in fact, we still see Fox tending to underperform ETH, even with these emissions way down. I think that's just the simple reason that in a bad market, Bitcoin, if Bitcoin drops 15%, ETH is going to drop 20%. And then longer tail assets like Fox are going to drop 25%. It's just a tendency we've seen over and over and over. But, that's just my perspective on that. So yeah, it's something we're going to be obviously, keeping an eye on moving forward. And just, to me, this spreadsheet is kind of like this is our North Star in terms of, some of the big decisions that I think the DAO needs to make. Of course, I can't dictate anything. I'm just presenting the facts here. But I will say this, as difficult as it is to have to reduce the budget, I think relative to many other DAOs, we're in a good position. We do have a meaningful amount of runway and various ways to tackle this. So, yeah, Firebomb, getting more exposure to BTC before ETH could make sense. BTC definitely tends to drop less in a bear market. So, maybe getting exposure to somehow like wrapped to Bitcoin in our treasury. That's an interesting thing for the TMDC to ponder. The only trick right now is almost by definition, accumulating BTC or ETH is sort of it's a zero-sum game. That means we're not accumulating stables, and stables are the one thing we can count on that won't drop, other than just good old inflation eating away at it, which is getting bad. That's not quite the same with ETH though, because we do have exposure to ETH via our liquidity mining, and I think that's an important facet of our current program. Give it a quick pause here in case anybody has any other thoughts. Cool. All right. So now on to like the more exciting stuff. I think the more forward-looking stuff. At least it's it's important to keep in mind, we're really heading somewhere, and there's a lot happening. So with respect to specific work streams, a lot of the work streams are renewing proposals now or shortly. I just saw one from the Mod Squad pop up. That looks awesome. I've said it before, and I'll say it again. I think we have the best Discord in the industry, and that's thanks so much to GK, Psychedelic, the whole mod posse. You guys just rock it, and it's just it's almost easy to take for granted sometimes, because it's like, there's not trolls and people harassing us and trying to sell us, fucking Viagra or some shit coin. But the silence is great, from those types of people, and you guys do such an awesome job. Tokenomics is coming to the end of its period as well or its current proposal. The last one was just for Q2, so a 3-month period from April to June. Obviously, June is ending very soon here, so it's time to re-up. So let me go ahead and share this. I posted a draft of the next phase of tokenomics proposal in the forum today. Of course, this is just starting out as a draft. This will encompass, as I've laid it out here, both Q3 and Q4, so a full 6-month proposal this time. The reason I didn't do 6 months last time is I felt like changing market conditions might warrant a fresh look at things, and I'm glad I did, because the market shit the bed. So, I just want to briefly walk through this with you guys. And of course, there's ample time, if you want to take a look and review it. But I'll just kind of touch on some of the main. I like to start off with like a performance review and kind of look at our prior, how do we do with respect to our prior stated goals. So in the last proposal, one of the goals was reach our goal of $10 million worth of stable coins. This one certainly fell short. The fact is currently we have 4.56 million in stables and about 10 months of runway. Our goal was to have 18 months of runway. That was feeding that goal of 10 million. So what happened here? For starters, I should have been more aggressive about advocating for stacking stables when the price of Fox was much higher. I think selling Fox on the open market when the price was higher, I should have stuck to my guns about that one. It could have hurt optics, but the fact of the matter is, if we had 10 million in the treasury right now, that would be a very acceptable trade-off, I think, for temporary optics type problems. So it's kind of a lesson to me as a leader to just maybe be a little bit more adamant about things. I'm not a conflict guy. I'm more of a consensus guy. It's just kind of who I am. But in this case, it was kind of a lesson that as a leader, maybe just when I feel really adamant about something, really stick to those guns. Of course, that may not have made a difference. I'm just a work stream leader. I don't have any, I can't dictate what happens, but certainly, in terms of advocating things to the work stream, the TMDC, and the broader community, I am in a position to make cases like that. But it wasn't just, that's just kind of like crypto is full of regrets. That's maybe my one regret as a leader so far. But there were some other factors as well that contributed to us not reaching that goal. So one is, of course, that in Q2 we sharply reduced our Fox emissions. So this was in response to community concerns that too many Fox emissions were harming the price of Fox, or artificially applying pressure to the price of Fox, as well as maybe just sort of not a great alignment by essentially sort of giving those who are purchasing the bonds relatively easy gains. Although I would argue that's precisely how it's supposed to work. And also, at the end of the day, these bonds did accomplish a very important goal of giving us a meaningful runway. In any case, these bonds resulted in us reducing our bond emissions in Q2, which led to fewer stables flowing in our treasury. Again, just to put this into perspective, right now we're generating 100K a month via these bonds. Previously, the DAO was generating 100,000 every day. So it's been a massive shift. And this is a very big factor in why I guess I should say that the prior stated goals for last quarter assumed that we would continue to generate stables at a rapid pace, and currently we're not. In addition to having fewer stables, we were also forced to deposit stables into Rari Fuse to lower our liquidation points and service those debts. That added up to about 1.5 million in Q2. We also had expenses related to our Ichi, getting out of our Ichi related positions, and also the TMDC also approved 100K for funding the VFox elastic swap strategic allocation. So that's kind of I think that's a good overview of what happened between having that more ambitious goal and where we are now. Let's see, it's already 4:24. I'll kind of blast through this. Other goals had to do with diversification beyond our current stable coins. We did have some wrapped ETH that actually turned out to be useful in terms of raising some stables recently. That was about 323,000. Completing the dashboard was a goal. This is thanks to the tireless work of Darwin. Darwin was a absolute driving force behind this. You can see all the links right there. Treasury wallets, revenues, expenses, performance. Darwin made this happen. So when you guys look at this, give mad props to him, because this would not exist without him. And also props to Seth for kind of getting the ball rolling on and really helping with some of that as well. But having a real-time, updated, transparent view into the DAO's finances is one of the most important things we can have as a decentralized organization, and really informs a lot of what we might do in tokenomics. So value accrual mechanisms. We worked on Foxy, stuff like that. So, okay, moving ahead to the primary goals for the second half of 2022. Obviously, we need to preserve and extend our runway. Looking at that DAO runway spreadsheet, which also takes into account the dashboards, is a good way. We need to start there. Okay, where are we right now? Where are we headed? There's a number of tools we can extend our runway. We still have our Olympus Fox bonds. We can continue to utilize those more. It's always an option to sell Fox on the open market. We have other tools like Hedgie, OTC, or Porter bonds. And finally, there's the budget austerity, which we've seen already, which I opened the chat with. Let's see here. There's no specific stablecoin goal here, because I feel like in this market, it would be a mistake to try to shoot for a stablecoin goal when liquidity is dried up, and also the community is divided on whether we should even be accruing stable coins with Fox emissions. This is an open question. I think we certainly should be aiming to raise more stables, but that is not my call to make. It's the community's. But ultimately, I think, if we can get to the point where we have enough stable income each month to at least pay for our monthly expenses, then that 10 months of runway seems a lot more defensible over the long run, because then we're not eating into it. So that would be a very good goal to have. So additional goals, build on the existing dashboard by creating some visualization, detecting trends, wonderful things like that could provide us with business intelligence. More value accrual mechanisms. In Q2, the focus was on Foxy. This time it's all about yieldies. We'll touch on that shortly. And then more being able to raise awareness of the DAO. I've had a chance to do, whether it's like podcasts or articles. Lindsay is very, very awesome about finding us opportunities in the DAO. And I've been able to do that multiple times, and I look forward to doing that as well. So on to the budget. Previously in Q2, I was getting 14,000 USDC a month had been approved for the workstream leader salary. That feels like a reasonable amount, because that's just like commensurate with what other workstream leaders get. However, I'm going to go ahead and take this amount purely in Fox. So I'll be going full Fox and not receive any USDC There's two reasons I want to do this. One is to directly help our monthly stablecoin spend. At the end of the day, this decision will not make or break anything, but it will certainly help by not pulling on our stable stack. I also just want to signal my own deeply held belief that we're going to survive this bear market, find a lasting product market fit, and wind up in a much stronger position than we are now. I really, at the end of the day, you know, it's like if the DAO somehow doesn't work out, then, you know, well, this will not have been a smart decision on my part. But I really believe that we're going to survive this and wind up in a much stronger position. Additionally, in order to allay any concerns about the Fox being converted and dumped on the open market, the proposal stipulates that these payments will be made via Boosted Fox with a 12-month time lock. So the entire salary in Fox with a 10-month time lock via Boosted Fox. In terms of funding for workstream projects and bounties, there's already going to be $7K left in there, left over after a yieldy related expense. And I'm just requesting another $13,000 to bring us up to $20K, which should be sufficient for sort of ad hoc types of analysis and expenses and other things that pop up through the end of the year. I feel like that's a pretty reasonable ask. Why shouldn't you vote for this? Well, imagine if there is the DAO, you know, could accomplish these functions without an actual work stream, perhaps, or at least a paid work stream leader. There's still the TMDC, which is separate from tokenomics. So yeah, and then precisely what does this vote do if it's approved? Would fund the work stream with that one-time distribution of 13K USDC and the monthly work stream leader salary of 14K worth of Fox with a 12-month time lock, and re-elect myself as the leader. Okay, so that's kind of where we're at. Again, I'm really excited to move forward in the next 6 months here. It's been stressful at times, but there's also it's also been sort of invigorating because it's like this is a time where you really have to focus, and you just can't fuck around in a bear market. It's easy to get sort of lulled into complacency when everything is going up, and it seems like there's this paradigm shift, and everybody is so happy and euphoric because everybody has gains on paper. But this is a time to just crank down and focus. So let's see. A little more talk of the diversification. Yeah, exactly. Like getting more BTC and ETH exposure in the DAO would be wonderful. I think that's a great goal coming out of the bear market whenever that happens, where maybe stables aren't necessarily needed as much, or let's say we kind of meet our stablecoin reserves goals. At that point, absolutely, let's diversify, and that's been a stated goal of tokenomics since the onset of this, having that type of diversification into blue chips, especially. Let's see. Oh, good point. Let's see. Ocean says 14K USD of Fox per month. Yeah, I could clarify. I'd say a monthly workstream leader salary of 14K worth of Fox. It wouldn't hurt to say, Fox per month there. It's always good to be explicit with these things. Cool. And just also, I said this at the end of the last term prior to the Q2 proposal, but I'm up here talking about this stuff, but there's so many people that contribute to the tokenomics workstream that make this happen. This workstream really wouldn't be anything without all those contributors. I'm just a dude that gets up here and talks every Tuesday. So we have everybody on the TMDC. The bond committee has so many good insights into what we're doing in many aspects of all this. We have so many good contributors in the tokenomics channel, both sort of regular DAO contributors and people that pop in frequently to hang out. So thank you to everybody that contributes and to the community in general for making this so much fun. So next we'll talk about yieldies. I see a few people typing. Ron, I see you typing. I'll pause once you post in the channel there. But just to give an update on yieldies, which are these wonderful frictionless financial primitives to earn yield, audits are in progress for these. I should say smart contract audits. These are in progress and being addressed right now, which is going according to plan. The proposal related to these yieldies, specifically with respect to creating and maintaining these for the DAO, has been successfully gone through ideation. It's been up there 8 days, which is more than enough. I will be pushing this on Shane imminently within the next day or so. So be on the lookout for that. Yeah, Ethan, great question. Are there good ways to participate or support tokenomics? I mean, in terms of participation, just the fact that you're listening right now is awesome. That's a great way to sort of get cued into what's going on. One of the best ways I've seen people contribute is just when they see something that they think is relevant to what we're doing in with respect to tokenomics. Just post it in the public tokenomics channel. Be like, hey guys, heads up, check out this interesting project. There's been many cases where people that even if they're not like regular posters in the tokenomics channel have come along with some insights or like updates that helped us make better decisions. You can also listen into the bi-weekly or twice a week TMDC calls. Those are every Tuesday and Thursday. Of course, those are open calls. You're always welcome to join. But yeah, if you're seeing interesting things or have any ideas, please jump in the tokenomics channel and share. We're always receptive to new ideas. And of course, this is an open DAO. You're welcome to contribute in any way you wish. Before we bring it into the final two topics here, so any last thoughts or questions in terms of just budgetary stuff, the overall tokenomics? Ron says, could you talk to the number of hours you put in weekly for tokenomics specifically, not VFox or TMDC? I don't actually track my hours. I get up, I jump on Discord, I crank for a few hours, take a break for lunch, crank some more. One of the things I like about the DAO environment is that we've stepped away from the need to track hours. I used to have a few contract jobs where it was that classic billable hours thing. You know, I'm sure lawyers are similar or used to a similar thing. But when you're kind of a slave to tracking hours, it gets very, it kind of sucks. I like to pay attention to, is the work getting done? There's been times when I've, been pretty exhausted at the end of the week. And of course there's lighter weeks as well. But I would say like tracking hours here at the DAO is something that, in general, I mean, I don't want to speak for other work streams. It's certainly nothing that I would expect of contributors. I think the important thing is, being present and getting the job done. Yeah, it's the cool thing is like this role never feels like work to me, which tells me it's like probably a good fit. Being able to be in crypto and be fighting this crazy battle, enjoying this fun journey, is wonderful. So cool. So I wanted to bring Willie and John up here quickly for an update on VFox. It's been a while since we've talked to you guys about VFox. Of course, this is the sub-DAO that's dedicated to making strategic allocations on the DAO's behalf into like generally early stage projects. Our first foray was into Elastic Swap. This was, it's something that we thought is going to be a wonderful fit. And of course, that's just the first of what we hope will be many. The VFox proposal gave the ability for the VFox to allocate up to $1 million worth of tokens to projects. That's been pre-approved. So hypothetically, like VFox could just YOLO into like okay, another $900,000 thing, but obviously we're not going to do that. And it's up to the TMDC per that proposal to determine how to raise those funds. But the fact of the matter is, like, we need to be super mindful of, you know, where we're allocating funds in this environment, you know, because but by taking those funds, we're taking them from our runway. So I think we can certainly find the right balance between investing in the future and not pulling too many stables. But that's kind of generally where VFox is at. John and Willie, if you have any other thoughts.
Agreed. Just to reiterate, we're still exploring opportunities. You know, on the flip side, a bear market can be a great time to find these opportunities. We've certainly met with some very, very compelling opportunities. But to Kent's point, we're being very sensitive. Another part of this consideration is, you know, making sure that we're not, if we are going to make allocations, that they are strategic, and that there's even possibility that we could see some upside and some return, like in the next 12 months. So, just taking a macro view, still exploring these opportunities. So if any of you guys do have opportunities we should consider, feel free to pass them along. But yeah, we are being very conscious of the overall stable situation, and certainly don't want to make any moves that would put the runway at risk. So, but yeah, if there's a great opportunity, we're still considering it.
Howdy, John.
Hey, can you hear me? I'm never sure anymore.
Yep.
Okay, great. Yeah, I think Kent and Willie, you both put it well, and I'll just add my thoughts as a member of the committee. We have had some interesting deal flow and things that we've been considering, and I think things that would benefit the DAO and the community moving forward. But we are being super cognizant. I mean, I personally have a very, not that we don't have a high bar normally of what makes sense for an allocation, but even higher bar, just given the state of the market and the DAO's treasury, it needs to be a total slam dunk, I think, for us to consider allocating anything at the moment. So yeah, just being very cognizant of that. And I think we're being more conservative than we would otherwise be, because we just don't want to do things that will hurt the DAO's runway right now. So keeping our ears to the ground. Some of these deals we're looking at do look promising, but yeah, I think we're hesitant to commit any large amounts, especially of stables, just given the situation right now.
That said, there should be a number of attractive opportunities, over the next 6 to 12 months, depending on what the market looks like, because funding in general has really dried up compared to what it was. Whereas projects before could be pretty certain of like finding investors. A lot of those investors are on the sidelines now because they're spooked, and even small allocations could really pay off for the DAO. And also, as we assuming we're able to sort of begin to have a more or a longer runway, and or maybe we are meeting our monthly expenses with stables every month, and we're not eating away at that runway, we may be feeling more confident about making allocations. So even though the maybe tactics of VFox are a little bit different in this awful market, the overall strategy, I would say, is unchanged, and it could be a very powerful asset to the DAO in general.
Yeah, I mean, the flip side is obviously just that there's better deals on the table right now than there was a few months ago. So it's kind of painful not having the ability to move a bit quicker, but ultimately the DAO's treasury and survival remains paramount over any of this. But there is a world where like the right one or two strategic allocations from VFox could actually pay for the DAO's next few years of runway. So trying to balance all of that is a difficult task, and the committee is trying to do its best at that.
Yeah, well said. If you guys have any questions about VFox, you can always actually, we do have a VFox dedicated channel. You can jump in there, or you can just ask any of the three of us. We'll be providing more frequent updates once when things are kind of, when more is happening. We are still actively vetting projects that hasn't changed. There's still certainly like attractive deal flow, and it's just because we're in a bear market doesn't mean we're not still looking at things. So yeah, we'll keep you guys updated. Next on the agenda, and as long as you guys are up here, especially Willie, so this came up in the TMDC chat, but previously governance had approved a Fox to Rune token swap and LP deposit, and this has sort of been backburnered. There was a question from a community member about kind of the status on this and what we'd be doing moving forward. The pool was paying about 60%, but it's now down to 9%. So Willie, I just, in case you have any updates on there, that could be useful as well.
Yes, there have been a number of technical challenges with actually executing this swap. We actually discovered some bugs with like the ThorChain network code that made it so that multi-sigs didn't work, at least with a ledger. We couldn't actually like use a hardware wallet to create a multi-sig and have both wallets sign the transaction. We tried to get hacky, and I think where we left off, Michael had given me some instructions, and I followed those instructions and basically gave him like a signed blob, and he was gonna recreate the transaction. That's the last that I remember. So it's on the back burner, and it's something that with everything we've been juggling has not been prioritized. I'll ping him right now and see if we can get that going again. It's also possible that there was another that we got past that, and there's another blocker that I'm blanking on right now. If I remember that, I will let you guys know. But yeah, basically we've been working through the technical challenges and need to spend some more time on it. We haven't touched it for, I would say, like a month. So thank you guys for the reminder.
Cool. Thank you for the update, Willie. Another thing that popped up in TMDC is our Agave pool. So liquidity has dropped on Gnosis chain, along with just pretty much everywhere. But any thoughts on our Agave, our presence on Agave, Willie?
Yes, thoughts on our presence on Agave. I had heard that I think they're going to disable maybe borrowing. Is that what you heard as well, Kent?
Exactly. Yeah, and thanks to Neverwas for surfacing that for us.
Yes. So Agave is a fork of Aave on Gnosis chain. So basically, the only way to add assets to Agave is via governance. We were one of the first assets that their community decided to add, and a big part of that was that at the time we had we had some of the highest liquidity for any tokens on Gnosis chain, so we were a good candidate for it. Even then, they wanted us to get more liquidity because it's a risk for their entire protocol if there are assets that don't have a lot of liquidity, basically. And it's similar, if you guys remember what happened with Ichi and the Rari pool, it's similar ideas. You can't have more being borrowed than there's liquidity for it to exit. Or it can cause cascading liquidations and create bad debt and stuff. So we haven't really prioritized more liquidity on Gnosis chain. And so because of that, the community is based, and because the Fox price has gone down and now the amount of liquidity we have is even less, to protect their protocol, they are pausing borrowing for Fox. If you have outstanding collateral or loans on Agave, as far as I understand, those will be active and basically until you close those positions. If we want to get added back to Agave, which is something to consider, TBD whether that's a priority over all the other things that we're working on right now. But what we would need to do is basically get more liquidity on Gnosis chain. Those things we talked about at last Tokenomics hours, like the prime deals as a way for token swaps, that could be an interesting avenue. Also, the Give stream, if you wanted to do another region farm on Giveth, that could be another way to incentivize liquidity without all the negative impacts of emissions, and while incentivizing and rewarding the farmers that are in it for the long haul with a stream, as opposed to incentivizing mercenary liquidity.
Awesome. Does that answer all your questions in terms of this? I know we covered this in TMDC, but that's a little bit more context. Hopefully that clears things up. Gnosis chain is in an interesting position right now because, of course, like any other side chain, like in a market where fees are down on Ethereum, sidechains are really going to kind of suffer because users are not as price sensitive. That goes for all the like competing, layer ones, the AVAXs and the near protocols and all that stuff, Binance, Smart Chain, but also like the side chains that live on ETH, like Polygon and Gnosis Chain. I think the notion that someday DAOs will have a major presence on Gnosis Chain is the biggest reason to sort of have a presence there. Of course, in this environment, it's harder to justify that, but yeah, I am. That's the thing that makes me more bullish on Gnosis Chain is the fact that we're able to use Colony all the time. It works pretty well, and in the future, I think DAOs will still want that low cost alternative to using it on mainnet.
Yeah, really, I agree with that. And Gnosis Chain especially, I really wonder how they're doing it because they have so many validators now. I guess they must be doing, perhaps they're doing some sort of block subsidy to incentivize validators right now. But they transitioned Gnosis, when it was XDAI, they had 21 validators. And now they've basically replaced their consensus mechanism, and they've kind of front run the merge. So they're using beacon style Ethereum 2.0 consensus. And instead of locking up 32 ETH to run a validator, you lock up one Gnosis token. There's also some pretty cool incentive programs right now. I think they're still running it. So if you want to try to run a node, you can basically buy a DApp node, which is a really easy, it's hardware that makes it really easy to run a node and run a validator. And basically get your costs covered with Gnosis tokens. I know they were running that at ETH Denver. I think they're still running that. I got my DApp node, and it's on my list of things to do to get that set up and start running a Gnosis chain validator. But yeah,
that's awesome.
It's super cool. And
so Gnosis Chain will actually subsidize or sort of compensate you for running a node to support their network.
Exactly. They have a big program right now. They're really trying to push to get a ton of validators. And they got a partnership with DAppNode as well. And yeah, they have I don't know the exact number, but it's I think over 100,000 validators operating right now. Pretty impressive. And also they recently passed a proposal to allocate $80 million of funding from the Gnosis treasury just to invest in the ecosystem. So yeah, it'll be really interesting to see Gnosis chain evolve, and if they can achieve their vision of basically getting a lot of the DAOs to adopt it. I'm definitely bullish, but it'll be tough to see. It's getting adoption for another EVM network and stuff is a very competitive space to be in these days. But I definitely think there's some unique and compelling differentiators that Gnosis Chain has on their side.
Absolutely. And other positive comments from Marley about DAppNode. I've also heard really good things about DAppNode. A lot of people are using DAppNode to actually run ETH staking nodes, and this is no small feat because you have to run a beacon chain node and a validator node. But doing that is a huge benefit to the Ethereum ecosystem because you're helping support the decentralization of the network. Tendermint is quite different. Not sure, Marley. Have you seen ETH staking running on DAppNode? I've heard a lot of good things about that, and now apparently you can do Gnosis Chain as well. That's really cool stuff. So DAppNode, you can either download the software, so you could just have your own box and install the DAppNode software. Of course, with something that sensitive with funds, you'd want to be doing a checksum. Make sure it's the right software, but get the software from DAppNode. Or they actually sell their own boxes like Intel NUCs with the software pre-installed. So really cool stuff. By the way, I'm super excited on about the merge. It's sort of just been under the radar lately because of the market sell-off, but the merge is coming. The test nets are looking good, and I think it's just going to happen, and people are just going to be like, "Oh my God, it actually they did it," and that's going to be a pretty cool thing. So, yeah. We've got 8 minutes left. If anybody has any other thoughts or comments, wants to jump on stage, or has any other questions in the channel. I know it feels a little bit more calm right now just because it's the middle of summer. If you guys want more insight into like DApp node, specifically in the staking context, go to the subreddit dedicated to Ethereum staking. That's r/ETHStaker. And there's some really good stuff on there. You guys may have seen Superfizz on Twitter. He started out by being very active on there, and now he's like this wonderfully enthusiastic proponent of like maximal decentralization with staking on Twitter. You'll see him around. Cool cat, and a lot of good insights there. One thing I would say to be mindful of if you are doing DApp node is, depending on the chain, make sure that your hard drive space is sufficient to handle whatever it is. This can get really big with Ethereum itself because we're talking about a lot of state. Even with some of like the cool pruning and stuff that Geth has done and making it more efficient, you need to be mindful of state bloat. I imagine that's more manageable on Gnosis chain, but I'm not exactly sure. Just something to keep in mind as you're speccing things out.
Hey, Ken, I got a miscellaneous topic if we got time for it.
Shoot.
Sweet. So yeah, just thinking about, we got this Yieldies launch coming up, and thinking about how critical it will be and how beneficial it will be if we can get significant TVL into those Yieldies. And tokenomic or tokamak right now, the yields have gone down quite a bit. I'm a little bit worried about any protocol that has really high emissions during a bear market, and that's kind of tokamak's whole thing, and can work great in a bull market, but it's TBD whether we'll have enough buy pressure and stuff to sustain these yields during a bear market and sustain these emissions. Anyways, thinking about some tools that we have available to us to basically target more TVL and incentivize more TVL. And I know we got Ocean here in the audience. Ocean, if you're available, it could be good to talk about potential like elastic swap farming opportunities that we'll have for some of these things. We could also potentially look at like some Fox incentives, maybe doing Fox incentives on a stream. But the reason, I'm thinking about this is that, if let's say we allocated some Fox rewards to these Yieldies that we launch, we can basically target a TVL and say like, okay, even if the tokamak yield isn't strong enough, what do we think is a compelling yield for this? Maybe it's like, 5%, 10%. Okay, let's say we want to target 2 million TVL. Okay, that would mean that for this 3 months, we need to have, allocate X Fox to this. If ElasticSwap's doing a program as well with tick tokens, then we can think about that and maybe really just focus on promoting that. Maybe worth having some CTAs for that in our UI. But basically, like, if we launch these tokens, or if we launch these Yieldies and we launch the farming programs until the first people deposit, that APR is going to be super high, and basically could be a great way to both attract the TVL to Yieldies, and because ShapeShift app.shapeshift.com is the only place that you can interact with these Yieldies with the UI, could be a great way to attract a lot of users to come check out the new ShapeShift. So I wanted to kind of put that idea out there so we could get the gears spinning as we get ready for Yieldies. And also, thank you for joining the stage, Ocean, because it would be good to know if ElasticSwap is open to doing any kind of farming programs for these Yieldy tokens as well.
Yeah, we're definitely open to it. I think as everyone's aware, the farming is a little bit different with ElasticSwap than a lot of other protocols, and the fact that you accrue tick tokens in an unrealized state, and as the protocol generates fees, those you actually get your rewards in the form of tick USDC LP tokens. So yeah, we're super open to it. I know we already have the Fox incentivized pool, and so I'm sure that would get migrated to the Foxy V2 when it happens, and definitely separating out some additional pools for the new Yieldies that we create would be something we're definitely interested in.
Sweet, that's awesome to hear. I'm really excited about that partnership, and I think that'd be a great way for us to support each other. So glad you guys are open to that.
Definitely. Obviously, the more trading that occurs, the better it will be for all stakers. So I mean, it's a good incentive for us to, and then we, certainly, obviously, that's helpful for the ShapeShift as well, right? With a huge amount of tick that's been staked too from the investment. So it's a cool way to tie everything together.
Agreed. It's a great win-win. And yeah, looking forward to getting ElasticSwap integrated too. I guess that's somewhat relevant topic. Have you guys, what is the status of that? I know it's something that ElasticSwap team was planning on doing. Do you think it'll line up so that when these yieldies launch and go on ElasticSwap, they'll be tradable in ShapeShift?
It's a good question. It's been on hold for the time being. One of the developers that was actively working with us since left. So I'm not sure exactly what the timeline is at the moment. Dan and Loki have been really focused on attending hackathons and trying to get some organic growth, just like in the rebasing token world, and trying to drum up more interest in rebasing tokens, since the tooling that ElasticSwap unlocks is something that's not been available, and right, everyone's kind of been wrapping their tokens to get away from rebasing. So right now it's kind of on hold, but something we could definitely take another look at and figure out how to get that to align with the launch.
Sweet. Yeah, good point on just trying to drum up, get awareness around ElasticSwap. And I know, I think Dan or Loki or both are talking to CowSwap too. So maybe that's another path that maybe even just going through CowSwap will be what we need. Cool. Thanks for the impromptu updates.
Yeah, for sure. And I'm wondering, just like thinking out loud, right? If we were to integrate 1inch into the platform, into the ShapeShift platform, if that would be even make more sense, right? Instead of trying to integrate ElasticSwap directly, because we're already integrated with them, and so then we potentially get another place for liquidity. It could yield better prices. I know they have the affiliate program too. So I think there's a couple different ways we could find a solution here.
Yeah, that's a great point. 1inch might be the ticket, and then we get ElasticSwap and more, and affiliate revs.
Good thinking. All the things.
Yeah, all the things, exactly. Cool. To answer, I know we're running low on time. HBAN had a question. Can we just give people points towards an 18-month locked hedging NFT? So for Fox rewards, we really do have quite a bit of flexibility in how we do this. So yeah, I think something like that is certainly on the table. To GK's point, we could do a give stream. But regardless, we can also have even if we just give them all the rewards up front, we can still make it a very sustainable program by basically rewarding users with Fox. That's based on the amount of revenues they're generating from the app or for the DAO treasury. And so it can be a fully sustainable model. But I like the ideas of maybe even it's good to get creative, and anything's on the table. So still some details to be fleshed out with exactly how Fox incentives work. We talked about it a little bit at the engineering retreat. Like we could implement Fox incentives right now. It'd be a lift, but we could do it. And there's already some Ethereum mainnet, just opportunities on Ethereum for generating revenue for the DAO that we could incentivize. We also have a vision for doing it, for incentivizing and rewarding revenue generating activity on other chains, but that's a little bit more of a lift. But regardless, I think the consensus right now is to first focus on some of these milestones in the near term, where we expect to see signs of organic product market fit that's not incentivized. And then once we see that, that'll be a great time to look at prioritizing these Fox incentives to pour some fuel on the fire. But we'll see. Once we start seeing signs of product market fit, we might also have some really good insights from our users on what features they'd like to see. So it's something that I'm really excited about, but just I think there's good arguments for not prioritizing it until we're seeing organic product market fit, because for long-term sustainability of the DAO and the product, we need to make sure that we have real product market fit, and that it's not just people coming for the incentives.
Yeah, awesome idea, HPain. It'd be interesting to play around with different variables on that. Like, would users be open to 18 months, or would something like 6 months work better? But there's a lot of interesting mechanisms there we can do, or we can employ. So yeah, that's about the the extent of our chat here. I'm sitting down again. You guys don't know this because it's not a video stream, but I always get excited. And right as the TMDC chat is switching to the stage, I kick my desk up into standing mode because I get too antsy if I'm not standing. But now I'm sitting again, so I suppose that means we're nearing the end of our chat. And good looking out, Willie, in terms of like looking ahead to the future of Yieldies, or the near term future as we launch, because the fact is DeFi yield generating strategies have really dried up in this market, and Tokamak, of course, is really almost kind of embodies what's happening. So getting creative with other mechanisms, and ones that are more sustainable, to augment that, will make Yieldies a more attractive value prop. So yeah, that's it for today, guys. Of course, we have the TMDC chat on Thursday. We will be meeting next Tuesday as well. If you guys are going to be out for the holidays, have an outstanding week and outstanding 4th. And yeah, have a good one. Take care.